if the Treasury got up to 6%. And I think a lot more banks would fail because, a lot more, the banking system is very insolvent right now.
So, Peter Schiff has sat down and given us some huge warnings about what the future economic landscape could look like following the election.
Thanks to all the low-yielding debt that they own, that they accumulated when rates were at zero. The Fed, averted another financial crisis when, they stopped hiking rates last time, and they bailed out like Signature Bank and, a few other, the Silicon Valley Bank, or a few banks that failed. A lot more would have failed had the Fed not, stepped up. But the whole system is insolvent.
In particular, he had a lot to say about the Democrats. They can't figure out why Harris didn't win, because to them, the economy is looking fantastic. Look at the government numbers, they say, as if those digits tell the whole story. Schiff, though, he's not buying it. He says those numbers are all just inflation in disguise, dressed up as economic growth. The real economy? It's been weak for a long time, and that's why people are feeling the pinch, no matter what the official GDP stats say. Then we get into the meat of it. Schiff points out that, yeah, we could squeeze out more of that fake economic growth like we saw at the end of Trump's first term, but it wouldn't solve anything. In fact, he argues, the problems Trump was elected to fix, well, those are still here, and they're getting worse. It's a volatile market, and sure, risk assets have gone up after Trump's victory, but experts say debt levels are still going to balloon. Deficits are widening, and according to Schiff, we're heading toward a real economic mess. Now, Schiff's been vocal about Trump.
There is no doubt Harris would have been worse for a whole lot of reasons. That's why I supported Trump, but I'm not delusional about what's coming next. The shit was going to hit the fan no matter which candidate was elected. Well, welcome back, Peter. Good to see you again. But what's the shit you're talking about?
Well, we've been kicking the can down the road for a couple of decades now, going from bubble to bubble. And that includes when Trump was president the first time. I remember when I voted for Trump. I was hoping that maybe he would actually be able to cut government, and that, the fact that he wasn't a politician, he would not behave like one. I was wrong on that. But he ran on a platform of cutting government, reducing government spending. He had something called his penny plan. He was going to cut, every year he was president, he was going to cut spending by a penny, 1 penny out of every dollar, which wasn't even enough. But of course, he didn't do that. He ended up increasing spending by 4 cents on the dollar for the first 3 years. That's, not counting COVID. If you count COVID, it was something like 16 cents a year because spending blew up so much in 2020. But even before we got to COVID, government spending was going up under Trump. The deficits he talked about paying off the national debt as a candidate.
He's quick to remind us that we've been kicking this economic can down the road for decades, going from one bubble to the next. Even Trump, back in his first term, didn't really change that. Schiff had voted for Trump hoping the guy would shrink the government. After all, he wasn't a politician, right? But to Schiff's disappointment, Trump ended up behaving exactly like one. Trump didn't shrink government. In fact, Schiff says he expanded it, even creating new agencies like the Space Force. And despite having Republican control of Congress at the time, welfare spending went up alongside military spending. So here we are in 2024 with an economy in far worse shape than it was back in 2016 when Trump first won. Schiff predicted Trump's victory back then because he could see the cracks in the economy that the media, the Federal Reserve, and Wall Street were ignoring.
Is that I knew the economy was much worse than the media was portraying, and the Federal Reserve and Wall Street, and the same thing is true now. We have a horrible economy beneath the surface. And Trump just showing up is not going to fix these problems, and neither will simply cutting taxes the way he has advocated, because most of the taxes are not really growth-oriented. They're consumption-oriented. You're cutting taxes on overtime, on tips, on Social Security benefits. So all this money is just going to be spent. And since we already have record trade deficits, the trade deficit we had last month, merchandise trade deficit was the worst in history.
And he thinks the same thing happened this time. Beneath all the headlines and government reports, Schiff says, there's a horrible economy lurking, and Trump's return to office won't fix these problems overnight. Simply cutting taxes won't cut it either, Schiff argues. The tax cuts Trump champions won't spur real growth. They'll just boost consumption, and with record-high trade deficits, that extra spending will go straight to buying imports. Sure, Trump wants to slap tariffs on those imports, but we're still going to need them because, according to Schiff, the U.S. lacks the capacity to produce many of these goods itself. And those tariffs, well, they'll just drive prices higher. At the same time, those tax cuts are going to blow a massive hole in an already enormous budget deficit, which is over $2 trillion a year right now. Schiff reminds us that when Trump took office in 2016, the annual deficit was about $650 billion. Now it's well over $2 trillion. Another thing Schiff highlights, when Trump came into office, interest rates were low. The Fed funds rate was just 0.5%, and the yield on the 10-year Treasury was around 2.5%. Today, those rates are much higher, with the 10-year yield pushing 4.5%, and Schiff expects rates to rise even further. That's a big problem for an economy drowning in debt. Higher rates mean higher interest payments, and Schiff predicts this will lead to even more economic strain, especially as Trump pushes for mass deportations. Schiff doesn't mince words here. He's all for strong border enforcement, but warns that a lot of the jobs created under Biden went to illegal immigrants. If they're deported, who's going to fill those jobs? Will Americans step in, and at what cost? Schiff argues that deporting this workforce could lead to labor shortages and higher production costs, making things even harder for the U.S. economy. At the root of it all, Schiff says, is a fundamental problem. The U.S. spends too much, borrows too much, and consumes too much. Inflation, which wasn't as bad back in 2016, is now a major issue because all the money printing from QE1, QE2, QE3, and COVID stimulus is finally catching up. Inflation is hurting people, and Schiff warns that it's going to get worse because Trump's policies are, in his view, highly inflationary. The Fed will be under pressure to print more money to cover these rising deficits, and that's going to create even more inflation.
So right now, the U.S. government spends about $7 trillion a year. So that's the tax on the economy. Now, what Trump ran on was cutting income taxes. Well, okay, but if you're not going to cut spending, you haven't cut taxes. So what Trump really wants to do is replace the income tax partially with tariffs, but he's pretended that Americans don't pay the tariffs, that the Chinese do or the Russians, which is not true. The tariffs are on Americans, not on anybody else. But the tariffs aren't big enough to offset all the tax cuts that he's promised so many people to get elected. And so we end up paying for government with more inflation. Right? That's what he doesn't want to say. And in fact, when all the Republicans, including Trump, blame Biden for all this inflation, right, they bear a lot of the responsibility. Trump pointed out, and the Republicans, that you're getting inflation because of all the deficit spending under Biden. Well, we had big deficit spending under Trump. Why doesn't that count? The thing is that the deficit spending and the money printing when Trump was president, we didn't see the effects on prices until Biden was president. And so what we've really had over these last few years is the Trump inflation. Wait till we catch up to the Biden inflation. That's still coming.
Schiff also takes a swipe at the idea that Bitcoin is surging because some think Trump will make it tax-free. He calls this notion stupid, pointing out that if the government has to print money to buy Bitcoin, it's just more reckless spending, and the inflationary spiral continues. So where does this leave us? According to Schiff, the markets have it wrong. The dollar's going up, gold's going down, and Bitcoin's booming, but none of it makes sense to him. He warns that we're heading into a period of stagflation, stagnant growth with rising inflation, and he doesn't see any easy way out. Schiff's solution? Stop spending, stop borrowing, and start making the tough choices. But based on what he's seen so far, that's not what Trump or any politician is going to do. Sure, in theory, it sounds like a smart economic move. Cut the fat, tighten the belt. But in reality, good luck convincing people that spending less government money is a good idea. Let's assume for a moment, he says, that Trump isn't actually going to cut spending. What's the plan then? Apparently, Trump wants to make the government more efficient. And how does he plan to do that? Well, maybe by hiring Elon Musk to run some kind of efficiency commission. Now, Schiff doesn't miss a beat here, and you can practically see the smirk as he rolls out the skepticism. Hiring Elon Musk sounds flashy. Musk, the guy who slashed Twitter's costs and fired half the staff. But does that really translate to fixing the government? According to Schiff, no way.
Elon Musk bought Twitter, and it was his company, and he said, okay, I'm going to cut costs, I'm going to fire people, I'm going to, because it was his money at stake, right? So when you have a private enterprise that is guided by profit and loss, and then you have competitive market forces, you have efficiency, because the inefficient companies are driven out of business by the efficient companies. And because the people that own businesses don't want to lose their money. So they try to be efficient. Governments are not subjected to those forces, right? When you're in Congress, none of it is your money, right? It's all taxpayer money. And your motivation is actually to spend as much of it as possible, because that's the source of your power, right? And there's no competition. Government isn't under a competitive threat because you got to buy government services whether you like it or not.
Governments, by their very nature, aren't set up to be efficient. Why? Because efficiency requires free market forces, competition, and the threat of going out of business, none of which apply to government. Schiff breaks it down. In government, the more you spend, the more power you wield. There's no pressure to be efficient because they'll take your tax dollars whether you like it or not. It's a system designed to spend, not save. In fact, if a government department doesn't spend all its money by the end of the year, it risks getting its budget cut the next year. So what do? They spend whatever's left, no matter how wasteful, just to keep their piece of the pie. And even if Elon Musk gets in there, Schiff says, he'll quickly find out it's a nightmare to actually cut anything. Why? Because about 80% of government spending is completely off limits. We're talking national defense, which Trump wants to increase, interest on the national debt, which is going through the roof, and entitlements like Social Security, Medicare, and Obamacare. That's most of the budget right there, and none of it's getting touched. Schiff is blunt. Even if Musk found ways to trim around the edges, it wouldn't make a dent. Interest on the debt alone is exploding. It's already over $1 trillion a year and could hit $2 trillion soon. The cost of servicing the debt is rising so fast that even massive cuts to discretionary spending wouldn't cover it. Now, Schiff has seen this movie before. He's 61 and he remembers all the times Republicans tried to cut spending. It never happens. Sure, they'll pass bills that promise cuts years down the road, but by the time we get there, they've already scrapped the whole thing. Schiff points out that back in 2016, Trump had a Republican-controlled House and Senate, and did they cut spending? Nope, they increased it. They did manage to cut taxes, though, and Schiff has no doubt they'll do it again. But this time, it'll be even bigger. Schiff's sure about one thing. When Trump gets back into office, those tax cuts are going to be huge. They'll extend the old ones from Trump's first term and cut corporate rates even lower. They'll even bring back the SALT deduction. The problem is, the country is way more broke now than it was in 2016. Back then, the national debt was under 20 trillion. Now it's going to be well over 36 trillion. And yet, here we are, talking about more tax cuts instead of tax hikes, despite the fact that we should be slashing spending, which Schiff says we're definitely not going to do.
America is more broke now, right? Yet we want to let the taxpayer off the hook with even more tax cuts when they should be having tax hikes, unless we're going to, slash spending, which we're not going to do. But in addition to all those, he never talked on the campaign trail the first time about exempting Social Security from taxes. That's a huge increase in Social Security benefits. He never talked about no tax on tips, or no tax on overtime, or no tax for teachers, no tax for firefighters or policemen or veterans. I mean, you're talking about an enormous amount of money. Yes, he's promising tariffs, but we still have the old tariffs. The tariffs he put in initially, most of them are still there, and Biden never got rid of them. Now, those tariffs didn't turn the economy around before. They didn't even turn our trade deficit around. We have record trade deficits with those tariffs. The trade deficits didn't go down. We didn't bring manufacturing home. We've been in a manufacturing recession for years. And so the tariffs aren't going to change that. They may even worsen that. So there's a lot of problems that, everybody is overlooking with all the, euphoria, particularly market euphoria. Because, again, the markets get way ahead of itself because, the markets will do anything if people are betting on it, right? Money is flooding in, but they're betting on something that's not going to happen.
Worse yet, the government will have to borrow more to cover those deficits, which eats into the pool of savings that should be used for investment. So while taxes go down and spending goes up, actual investment, the thing that really drives economic growth, gets squeezed out by government borrowing. According to Schiff, this won't grow the economy. It'll just inflate the deficits and widen the trade gap as people use their extra cash to buy imported goods. As Schiff puts it, we've been running on fake economic growth for years. Since the 1990s under Greenspan, the numbers look better. GDP, stock market, all of it, but only if you measure it in dollars, which Schiff dismisses as fake money. Measure it in gold, and you'll see the real economy is shrinking. And now, despite all the so-called good numbers, people are struggling more than ever. Schiff explains that the Democrats don't get it. They think the economy looks fantastic on paper, but in reality, it's been weak for a long time. And Trump? His policies won't change that. Schiff's prediction? We'll get more of the same. Short-term gains followed by bigger problems, and eventually a Democrat in office to promise more change. The cycle continues, and Schiff isn't optimistic. Real solutions would require short-term pain, and no one's willing to deliver that, least of all Trump, who's promising instant economic booms and gold line futures. Schiff doesn't buy it for a second.
Because the problems keep getting worse, because nobody wants to actually solve them, because solving them requires some short-term pain. Trump didn't promise any short-term pain. He said, you elect me and it will boom immediately. It'll be a huge economic boom and you're all going to be rich. That was what he was selling to the voters.
Yeah, he did say we're entering a golden age of America. That's what he said in his victory speech. Speaking of gold, I'm glad you brought up gold. Let's talk about gold and the dollar and Bitcoin now. Gold, new all-time highs throughout the year. It didn't like the Trump victory, though. I know it's only been a week, but gold's down. And in particular, the day of the election, it went down a lot when Trump was announced as the victor. And this is what happened with the dollar. So, the dollar's up, gold's down, makes sense. But why is the question? Why doesn't the market like gold on the back of a Trump victory?
Well, because again, everything is risk on, right? Gold is risk off. So people think the U.S. economy is going to boom. The stock market's going to boom. Why do I want to own a safe haven like gold when I can make a fortune in the stock market in this booming economy? They also think that the strong economy is going to mitigate the rate cuts. So we won't get as many rate cuts as the market might have thought. So they think that higher interest rates is a negative for gold. Yeah. Also supporting the dollar. We've had a big rally in the dollar since Trump won, and so that is weighing heavily on gold. Also, we've had some comments, and speculation that the BRIC nations and other nations that were moving away from the dollar are now going to embrace it because they don't want to piss off Trump because he's threatening all these tariffs. And so maybe because now we got, a new sheriff in town, that the move out of the dollar is going to slow, and that the central bank buying of gold, because if central banks try to be more friendly to the dollar to appease Trump, and hey, we're not selling our dollars, right? Don't tariff us. Look, we're your buddies. If they're going to stop that, if they're going to stop selling their gold, their dollars, they don't have to buy as much gold. So there's a lot of reasons that people are thinking, hey, this is going to be bad for gold. Now, look, gold went up by about 40% during Trump's first term, about 10% a year. And so it wasn't like, gold didn't do well when Trump was president. But I think it's actually going to do a lot better, despite what the markets are saying right now. I think the markets are wrong again on this.
In the end, Schiff believes we're headed for more of the same. Big promises, bigger deficits, and ultimately more inflation. And when the dust settles, the real winner won't be the U.S. economy. It'll be gold. How do you think the next few years will be for the economy? Let us know in the comments below.